So you've got a lot of money in the bank, but what if something happens to your bank? What if your bank fails? You could lose everything. You might be thinking, that's not going to happen to me. My money's safe. The banking system's safe. But the truth is, the banking system has shown a lot of vulnerabilities in recent years, and you need a strategy to protect your wealth. That's exactly what I'm going to give you in this video. I'm going to be going through some different steps that you could take to protect your wealth and hedge against something like a bank failure so that you are protected. So you're going to want to stick around. Let's go ahead and dive right into it. Now, as you may know, I'm a big fan of Bitcoin, and some people perceive Bitcoin to be very risky. But to be honest with you, I think the banking system is much more risky than Bitcoin. Since 2020, we've seen 15 bank failures, according to the FDIC. Back in 2023, we saw two of the largest banking failures in US history, with Silicon Valley Bank going down and then First Republic Bank going down, two large Bay Area banks. And this was a warning sign to the world, to the people, that you might want to start storing more of your wealth outside of the traditional banking system. Just this year in 2026, we've already seen a bank failure. It was Metropolitan Capital Bank and Trust in Chicago. And with all the vulnerabilities that we're currently seeing with the banking system, I wouldn't be surprised if it's the first of many. Now, why do we see bank failures? The main reason is that this system is fundamentally flawed. The US banking system is a fractional reserve system. If you don't know what that means, it basically means that they can lend out all your money. And I believe that people have a misconception about how the banking system works. When you go and deposit your money at the bank, they don't keep it there. They don't keep it safe for you. They take that money and they lend it out in order to make a profit. I don't think this is how banking should work. I think that when you deposit your money at the bank, you're looking for a custodian, someone to watch your money and keep your money safe, but that is the illusion of the US banking system. Back in 2020, we saw that the government lowered the reserve requirement for banks down to 0%, which means that they don't have to hold any of your money. They can lend all of it out. This makes the banking system very risky. It leads to over leverage in the banking system, and it's probably what's going to lead to more banking failures in the future. Now, why do the banks lend out your money? They do it for two reasons. The first one is for investment. The banks would rather lend out your money and earn interest rather than let your cash sit there and not earn anything. The banks are a business. They're not there to protect your money. They're there to make money. The second reason is that banks need to support this credit-based system that we live in, and they really need to support the government. As you may know, the government, the US government, is highly indebted. We have around $39 trillion in national debt, and the government is constantly needing to issue more debt. They need someone to buy that debt, and one of the main buyers are the US banks. So the banks take your deposits, your cash, and they lend that money back to the US government so that they can go into more debt and the system can continue. We also see that the banks support other debt markets. If somebody has a credit card that they need to pay off, but they don't have the money and they need to take out more debt, what will the bank do? They'll issue them another credit card. If somebody needs to refinance a business loan or a home loan, what does the bank do? They lend them that money so that they can do that. So the banks are really responsible for facilitating this credit-based system and making sure that credit expands so it doesn't fall apart. As long as credit keeps expanding, this system can continue to work. But when the economy starts to weaken and credit starts to contract, that's when things start to fall apart. And we've been seeing some signs lately that the economy is not looking so hot. We just got revised job numbers for 2025, and they were down by over 1 million jobs, signaling that the job market is not looking so great. If you go on LinkedIn right now, you'll probably see a lot of open to works. I've heard from a lot of people in my local community that they're having trouble finding work. So the job market is not looking great, and that is not a great sign for the economy. We've also been seeing that prices have been falling, signaling weakening demand. You notice this when you go to the gas pump and gas is under $3 a gallon. That's because we're not producing as much. That's not a great sign for the economy. We've been seeing this with our Trueflation indicator, one of my favorite indicators for measuring prices. Let's go ahead and take a look at a little chart of that. As you can see, Trueflation has been falling over the past couple of months. It's down to 0.87%. 10%. We're also seeing rising delinquencies in areas like auto, credit cards, and commercial real estate. And what's one thing we know about government data? It's often understated, right? This data that we're getting is often inaccurate. If the economy is weakening and people are going delinquent on their loans, what does that mean? It means that the banks are taking losses. People are unable to pay back the bank. We also know that if the economy is weakening and people are losing their jobs, then people probably need money, right? To pay for rent, to pay for food, to pay off their other debts. So what are people doing? They're going to the bank and withdrawing their money. And the problem is when too many people go to the bank and withdraw their money at the same time, the bank doesn't have it because the bank is a fractional reserve system. Now, one last thing I'll mention about the banks is that we already know they're in a vulnerable position due to their $337 billion worth of unrealized losses. So let's go ahead and take a look at a chart of that. As you can see in this chart, it does not look pretty. The banks are underwater. And the reason that they're underwater is because they took your deposits, your cash, and they made bad investments with it. Now, before we get into some of the different ways that you can protect yourself against the banking collapse, I would appreciate it if you liked the video and subscribe to the YouTube channel. I'm also going to put a QR code down below for a Bitcoin tip. So if you want to support the channel and leave me a little tip, I'd appreciate it. Can you guess the best way to protect yourself against a bank failure? You guessed it, baby. It is Bitcoin, because Bitcoin is money that you can hold outside of the traditional financial system. You don't keep your Bitcoin at a bank, or at least you shouldn't. You can hold the Bitcoin yourself. And this is why I think that people should at least have a little bit of Bitcoin. You don't have to put your life savings into it, but at least have a little bit of Bitcoin stored away in a safe place so that if you experience something like a bank failure and you lose your dollars, you know that at least a portion of your money is safe. Back in 2023, following the collapse of Silicon Valley Bank, we saw that Bitcoin started shooting up higher in price. And the reason that it did this is because this bank failure was a great advertisement for Bitcoin, an alternative form of money that you can hold outside of the banking system. I personally believe that Bitcoin is just better money and we're moving towards Bitcoin altogether. But if anything, Bitcoin is an insurance policy against the banking system and the traditional financial system. And I do think it's smart that everyone has at least a little bit stored away in cold storage. Now, if you're new to Bitcoin, you might be wondering, where should I buy it? And today, the best place to buy Bitcoin is River. River is one of my favorite Bitcoin platforms. I love it for a couple of reasons. For one, it is very secure. They have proof of reserves on the River website, so they show you that they're holding all of their Bitcoin there. They're not lending out your Bitcoin like the banks lend out your cash. We also know that River is Bitcoin only, which I like. I don't really trust a lot of these cryptocurrency exchanges because they have exposure to all this other crypto crap that I don't care about and that I think is risky. River also has very low fees. You can buy up to $1 million worth of Bitcoin for just a 1% fee, which I think is generous. If you're buying more than that, I know most of us aren't, the fees actually go down. River also has a lot of great educational resources that you can use to learn more about Bitcoin, so I highly recommend you check those out. If you want to get started buying Bitcoin or move to the best platform for buying Bitcoin, check out my River link below. I'll put it in the description. Now, once you have Bitcoin, you want to keep that Bitcoin safe, and that's why you need a cold wallet. A cold wallet allows you to be in full control of your money, full control of your Bitcoin. You can put your Bitcoin onto a device like this and essentially be your own bank. And I love this because this means that I don't have to trust anyone but myself. I can use the cold wallet and I don't have to trust a JP Morgan or a Wells Fargo. I can be in full control of my money. Now, I'm going to go through a couple of my favorite cold wallet providers. The first one is Trezor. And the reason I love Trezor is that this device is very easy to use. It's very user friendly. So if you're someone that isn't too tech savvy, maybe you're very unfamiliar with Bitcoin, I think this is a great cold wallet to start with. If you're maybe older, this is perfect for granny, perfect for people that are just looking for a safe way to store their Bitcoin that is easy to use. I'll put a link down below to Trezor's products in the description. Another one of my favorite cold wallet providers is CoinKite. This is the CoinKite MK4. It kind of looks like a little calculator. And what I love about CoinKite is that these devices are highly secure. This is one of the safest cold wallets out there. They have a great reputation. They are also open source, so we can audit the code audit the software and make sure that this device is safe to use. The only downside to CoinKite is that it is a little less user-friendly. It's probably for people who are a little bit more tech savvy or a little bit more familiar with Bitcoin. Still a great product, and if you want to check out CoinKite's products, I'll put a link down below in the description. Now, I also want to mention that I'm going to be making a cold wallet comparison video soon here, comparing some of the top cold wallet providers out there. So if you have a favorite cold wallet, go ahead and let me know down in the description so that I can include it in the video. Also, make sure to subscribe so you don't miss out on that video coming soon. Along with holding Bitcoin in cold storage, there are some other good ways that you could protect yourself against a bank failure. One good way is by holding physical gold or physical silver. If your bank fails and you have physical gold locked away in a safe place, well, that gold is going to be safe, and that gold is actually probably going to go up in value. The great part about physical gold and silver is that it doesn't have counterparty risk, right? It's not tied to the traditional financial system. Now, if you have a claim to gold or silver, if you're holding a paper certificate, I don't think that claim is safe, and I would highly recommend holding the actual physical asset. And as we've seen over the past year, people who have been holding gold and silver have been doing very well. These metals have gone up a lot as we've seen uncertainty rise across the global economy. Another option is real estate. Real estate is always going to have value. It's a real asset. If you have a rental property and it is giving you income, that's a great way to hedge against something like a bank failure, right? That asset is going to hold its value and continue giving you income. We could also think about farmland. If there is this great systemic banking collapse one day and the dollar system falls apart and there's mayhem in the streets, you know where I'm going to want to be? On the farm, where we can produce food for ourselves, or we can protect ourselves. I think that in this scenario where we do have a dollar system collapse, farmland is going to become very valuable, as it's a real asset and you can produce real assets on it. You can sustain yourself from farmland. So I think that this asset is going to become more and more valuable over time, especially as the dollar system is starting to look more and more shaky. Another great asset to protect against a bank failure is a business. A business is a real asset with real value. The one thing I'll say about investing in business is that you want your business to be keeping their money in the right spot, right? If the business is keeping all their money in cash at the bank and the bank fails, well, the business is going to be in a lot of trouble. I would be much more inclined to invest in a business if they were storing their wealth in Bitcoin and keeping that Bitcoin in cold storage, or maybe investing in something like real estate or gold, real assets that are going to hold their value over time. To recap here, in this video, we covered why you need a plan to protect yourself against a bank failure. We covered some of the different vulnerabilities out there in the traditional banking system. And then we covered some of the different strategies that you can take to protect yourself from this outcome. My favorite of those strategies is holding Bitcoin in cold storage. All of those strategies are going to better help you protect yourself against a bank failure. That's going to wrap it up for this one. If you didn't like and subscribe, please make sure to do that now. Thanks for watching. I'll be back soon.